Yes. So my name is Haris Bhatt, and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today we are going to solve a question from O Levels Accounting 7707 and IGCSE Accounting 0452. And the question which has come in the exam has come in which paper? February, March 21, 22. So the question is basically from the main cash book, 3-column cash book, and it has come in February, March 21, 22, 0452 IGCSE, but it is also a part of O levels, level 707. So February, March 21, 22, let's start the question. Shilpa is a trader. The following transaction took place in January. I am going to pass the entries for you, though entries are not required, but just to make the question simpler and easier to understand, I would rather go for the entries. So January 2, we are going to pass the entry, paid rent 450 by direct debit. Entry will be rent is going to be an expense debit, rent debit, and bank credit, because direct debit means that the amount has been deducted from the bank. So rent debit and bank credit, it will go in cash book. Bought goods on credit from the list price 120, subject to a trade discount of 25%. Trade discount is a discount which is given on list price, and it is not shown anywhere in the books. Rather, it is subtracted from the total amount. So I will take 25% of 120, which will come 30, and I will pass the entry purchases debit and Dilip credit, because I have purchased the goods on credit, on account, on time. So whenever goods are purchased, we debit purchases, and Dilip is our trade payable. Increase in liability credit, but the amount is 90, because trade discount of 30 will be subtracted and will not be shown anywhere. So this entry on January 2 will not go in cash book, it will go in purchase journal. Sold goods on credit to Kabir, list price 200, subject to a trade discount of 20%. Obviously, trade discount needs to be subtracted. It will not shown anywhere. 200 into 20% becomes 40. 200 minus 40, 160. The entry will be Kabir debit and sales credit. It will be recorded in the sales journal, because again, there is no cash and bank involved in the entry. Sir sold surplus office fittings 9, January 9 for 110, which was paid by credit transfer. So it means that we have sold a non-current asset and we are getting the amount through bank. So bank is going to be debited, and office fitting, decrease in asset, is going to be credit. So bank debit, office fitting credit, and it will go in the cash book. Return goods to Dilip, list price 20. These goods have been purchased on 3rd January. So we have purchased goods on 3rd January, and out of that, we are basically returning the goods back to Dilip because they were not damaged, not according to quality, not according to specification. The entry will be Dilip debit and purchase return credit. Because when we are returning the goods, purchase return is going to be credited or Dilip is going to be debited, because Dilip is no more my trade payable. So decrease in liability debit, but that return is basically on list price, that is 20. So I have to take 20 into 25%, because it includes trade discount, which is not supposed to be shown anywhere in the books. So it comes 5. 20 minus 5. I will pass the entry Dilip to purchase return with the amount of 15. It will go in purchase return journal. Paid 50 to Dilip in cash. Dilip debit and cash credit will go in cash book. Cash sales 85 were immediately paid into the bank. Bank debit and sales credit. Obviously, it will go in the cash book. 85 bank debit and sales credit. Next, paid office expense by credit transfer. Office expense debit, expense always debit, and bank is going to be credit by 30. Again, it will go in cash book. Sold goods on credit to Pari. Pari is going to be debited and sales is going to be credited. So Pari debit and sales credit, it will go in sales journal with an amount of 150. Kabir paid by check for the goods he purchased on 6th January after deducting cash discount of 7.5%. 7.5% means 7.5%. So we are making the payment. Who we are? Let's see. We are Shilpa is a trader. Okay. Shilpa is a trader. We have sold goods to Kabir, being Shilpa. Now Kabir is basically making the payment to us. Kabir paid by check to us. We are Shilpa. So bank is going to be debited. Discount allowed is going to be debited. And Shilpa is going to be, or Kabir is going to be credited. So bank debit, increase in asset. Discount allowed expense, it is always debited. And Kabir is no more my trade receivable. It is going to be credited. But what is the amount on which we are going to calculate the discount of 7.5%? Let's see. If we just look at the question on 6th of January, we have sold goods to Kabir 200 with a trade discount of 20%, so 160. And that 160 amount we are receiving from Kabir. So bank is going to be debited, discount allowed debit, and Kabir is going to be credited. I will calculate 160 into 7.5%. That will be my discount allowed. Paid Pari 141 by check in full settlement of the purchases made on 20th January. If you just look at the question on 20th January, we have sold goods to Pari of 150. So we are making the payment of 141. So the entry will be Pari debit. Bank is going to be credited by 141 and discount received will be credited by 9 because it is an income for us. Income is always credited because we are supposed to pay 150, but we are paying 141. So discount received is 9. Sold goods on credit to Yash 62, offering him a discount of 5% if he paid within 21 days. So the entry will be Yash debit and sales credit. It will go in sales journal. There is no reason to discuss or calculate this 5% discount because it is a cash discount. Definitely it will be recorded. But when the Yash is going to make us the payment. So if he is going to make us the payment within 20 days, we will offer him discount, but 21 days has not yet been passed. So forget about this 5% because it depends that either he is going to make us the payment after 25 days or not. So first of all, in the question, the examiner has asked us to prepare the sales journal, which we can do easily, date and amount. Sales journal or journals, books of prime entries, they don't have any debit and credit side. It is just a format of sales journal in which we record the names of the people to whom the goods are sold on credit, their amount, and then their total. So let's do it. Sold on credit. Paid rent, bought goods, sold on credit to Kabir, 200 with a 20% trade discount. So I will write over here, date is going to be 6. I will write the name Kabir and the amount is going to be 160 after deducting the trade discount because trade discount is not shown anywhere in the books. It will not be recorded. Rather, it is subtracted from the total amount. Then again, sold surplus furniture, that is furniture, not goods. So forget about it. Returned goods to Dilip, that is purchase return actually. It will also not come. Cash sales will not come. Sold goods on credit to Pari 150. It will come on 20th. So I will write the date 20. Name will come of Pari and the amount will come, which is going to be how much? 150. So 150. Let's see. Then again, we have sold goods on 26th to Yash 62 on credit. Again, so I will write the date 26. All the goods which has been sold on credit, I will write the amount. And 62 is the total amount. Go for the total. You will get the total credit sales. Because in sales journal, we used to record the same thing. We record the names of the people to whom the goods are sold on credit, their amount, and their total. This is the way we used to record this. So 160 plus, 160 plus 150 and plus 62. So 372 is going to be the answer. Okay. So that's how we have purchased the we have gone for the sale journal. 4 marks for the. Now we have to prepare the cash book, 3-column cash book, and the balance is already given. 200 for cash and 814 for bank, which is a positive balance. Both. There is no bank overdraft. I'll prepare the cash book with its format, date, then discount. That is discount allowed basically, actually, because it is written on the debit side, then cash column and bank column. Again, I'm going to write the date. Then I'm going to write the discount column, then the cash column, and then the bank column accordingly. The balance of the cash book is given in the question already because it is shown that we have already cash with us with an amount of 200 and we have already cash in the bank also. So balance of bank is also given. That is with 814, if I'm not wrong. I will write it down and then we'll see if either whatever we have written is correct or wrong. So let's write the balance first. This is the debit side and the credit side. So balance of cash is 200 and bank is 814. We could have a overdraft balance of bank, but here it is not given. And the date is, the year is 2021. I will write the year also. And the date is basically January 1. We will have the brought down of cash, that is 200, and for the bank it is 814, and this is also on the right side. This is 2021. Now I'm going to solve the question, but remember this, I'm going to link only those entries in which cash or bank is involved. Only those entries is going to affect the cash book. So I will move toward the question again. I will start from the paid rent 450 by direct debit. So again, I will pass the entry January 2, rent debit and bank credit by 450. So I will write over here January 2, and rent bank is going to be credited because of rent, and the amount is 450 is going to be the amount. So bank is credited by 450 because of rent. Next, bought goods on credit from Dilip, it will not come in the cash book because cash or bank is not involved. Sold goods not come. Sold surplus office fitting for 110, which was paid by credit transfer. The bank is going to be debited, and office fittings is going to be credit on January 9. So I will write over here. Now I'm not going to write the January. I'm just writing 9. And office, what is this? Let me see. Office fitting. Okay. So I can write like this, office fitting. And we have sold the office fittings through bank because the amount we are receiving by credit transfer, so 110, will be debited in the bank column of the cash book on January 9 because of office fittings. Next, return goods to Dilip, list price 20. This is purchase return, won't come. Paid 50 to Dilip in cash. So Dilip is going to be debit on 11 and cash is going to be credit. So I will write over here 11 and the name will come of Dilip and cash is going to be credited by 50. So basically cash is going to be credited by 50 because of Dilip actually. So name will come of Dilip. The cash sales 85 are immediately paid into the bank. So bank is going to be debited by 85 and sales is going to be credited. So I will debit bank column with 85 because of, with reference to sales. And if you just look at the date is 15th of the January. So I'll write over here. Next, paid office expense 30 by credit transfer on 17th. Office expense debit and bank is going to be credited on 17th. So office expense and bank is going to be credited by 30. So bank is credited by 30. We will write in the bank column 30 on the credit side because of office expense. Sold goods on credit obviously will not come. No cash or bank. Then Kabir paid by check for the goods he purchased on 6th January after deducting cash discount of 7.5%. Kabir was our trade receivable. We have sold the goods to Kabir first of an amount of 160. Now he is making the payment. So bank is going to be debited. Then discount allowed is going to be debited. And Kabir is going to be credited by how much? By 160. Because he is making the payment. 200 was the sales actually. 20% was the trade discount. So it will not come. 160 he is paying us. But after deducting discount of 7.5%. So $12 we are not getting. It's an expense. That's why it is going to be debited. And we will debit bank with 148. So let's see the date. That is 21. So on 21, I will write Kabir. Bank is going to be debited by 148. Discount allowed is going to be debited by 12. And Kabir ki wajah se, because of Kabir, we are debiting bank and discount allowed. Next entry for Pari. Pari paid 141 by check in full settlement of the purchase made on 20th January. 20th January, we have sold the goods of 150. So out of 150, we are basically, trade payable is decreasing by the full amount, but we are making the payment through check with an amount of 141. And the remaining amount is basically discount received, which is 9. So pari debit, trade payable decrease in trade payable debit, right? And bank is going to be credit, decrease in asset credit, discount received is an income. It is also credit because we have been given the discount received is an income that is on 24th. Name will come of, oh, sorry, pari, and bank will be credited by 141, and then 9 we are going to have the discount received. So let's go for the total of these columns, and we are going to go for the I think I've written the discount on the wrong side. Written the discount in the bank column. It will come in the discount column here, and I think 141 will also come on the bank column because we have received, we have paid the amount through bank, 141. So let's go for the total. The total of discount allowed column on the debit side, which is an expense, is 12, and total of the discount received column on the credit side, which is income, is going to be 9. Now let's talk about the cash column. 200 is going to be debited because debit side is heavier. I will write the same amount on the credit side, and on 31st January, I'm going to write the carried down of cash, and that will be 150. 150 is the carried down of cash. Now let's talk about the bank. Obviously, debit side of the bank is heavier. I will write the total of the heavier side on both sides. If you can go for the total, let me calculate it. 814 plus 110 plus 85 plus 148. So the total is 1157. Same total I'm going to write over here. 1157. And I will subtract the credit side, minus 450, minus 30, minus 141. So 536 is going to be the carried down of the bank. We can have an overdraft balance of the bank also. It is a possibility. Bank can have a debit balance, bank can have a credit balance. Both are part of the story. But here we can write the brought down again, 536. It shows that we have cash balance at the start of 200, and we have cash balance now at the start of the next year, and that is 150. If we talk about the bank, we have a cash balance of 814 at the start, but now bank balance at the start, but now the bank balance has decreased, and it will lead to 536. So both the cash and bank has decreased. So it means that we are making more payments from the cash book through bank or through cash. So if there's any problem, you can ask me. Otherwise, we are done with this question. If you have any question, you can ask me anything because it's quite easy according to me. Okay. So this is how we are done with the question. If you just look at the cash book which you have prepared. Now he's saying that prepare the Dilip account for January, balance the account and bring down the balance on 1st February. There was no balance in Dilip account on 1st January 2021. So always remember, मैंने आपको लिखाया भी हुआ है कि whenever you are supposed to prepare a trade receivable or trade payable account, you need to write the balance brought down first. But in this part, it is already given that balance the account and bring down the balance on 1st February. It is written that there was no balance on Dilip account on 1st January 2021. So we don't have a balance in the Dilip account on 1st January 2021. So it means that whatever entries are there regarding Dilip, we will pass those entries and we can prepare the account of Dilip easily. So let's prepare the account of Dilip in our question. So let me prepare on the same format actually. First entry is bought goods on credit from Dilip, list price 120 subject to a trade discount of 25%. So entry will be purchases debit and Dilip credit with 120? No, with 90. Because 25% is the trade discount, which is not supposed to be shown anywhere. It will not come anywhere, right? So purchases debit and Dilip credit with 90. Then we have returned the goods to Dilip at the list price of 20. So Dilip debit and purchase return credit on 10, but 20 into 25%, that become 5. So the entry will be passed by 15. Then we have paid Dilip in cash. Dilip debit and cash is going to be credit. And then these are the entries which are supposed to be passed regarding Dilip. There is no other entries. So let me prepare the T account of Dilip. I can prepare now easily. You see, first of all, we have purchased goods, so it means that Dilip is our basically trade payable, but there is no brought down. So now we have purchased goods from Dilip on third, that is purchases debit, and the amount will be of 90, because 120 minus 30 is the trade discount, it will not come. Then we are making the return of the goods to Dilip, that is going to be purchase return, and that is of amount of 15, 20 into 25%. 5 will come. So 20 minus 5, 15 amount we are paying. Then we are making the payment to Dilip through cash. Actually, we are making the payment to Dilip through cash, and the amount is going to be 50. So this is how we are going to prepare the account of Dilip. I'll go for the total. Obviously, the credit side is heavier because we have purchased the goods with an amount of 90. 90 will come over here and 90 will come over here also. And here I'm going to write the carried down on 31 in the Dilip account, and how much it will come. 90 minus 65, so it is going to be 25. And we'll write the brought down also with 25, that we are supposed to pay Dilip 25 at the start of the next year. So this is how we are going to prepare the Dilip account. You can write it down and you can ask me any problem if there is any. It is quite easy. So always remember that in the paper, you will have been asked to prepare a trade receivable account or a trade payable account. Simple trade receivable, trade payable account. This is also known as statement of account. This is also known as statement of account. Statement of account is basically a T account in which we record all the transactions related to a particular trade receivable or trade payable, showing him detail of all the transactions for a particular month, and also showing the balance due to him or due by him at the end. Obviously, this account also shows that 25 is still due by us to Dilip. Complete the following table by placing a tick to indicate which document Dilip would send to Shilpa for the return of goods. Debit note, and the second is credit note. Which document Dilip will send to Shilpa? So basically, for us, Dilip is our trade payable, but for Shilpa, Dilip is our trade payable, but for Dilip, Shilpa is basically a trade receivable. So it means that we have purchased the goods, we are returning the goods, but he is getting the goods back. Dilip is basically getting the goods back. So for him, it is going to be sales return. And for sales return, we'll go for the credit note. So indicate which document Dilip would send, that is going to be credit note, not the debit note. Yes, okay, we are also going to end the class. Debit note, Shilpa will send debit note for the same amount of 15, and Dilip will send credit note for the same amount of 15. In the question, it has been asked that which document will Dilip send, that is credit note. Right? So thank you very much. Next questions you have to come at your own, May, June 23, 22. You will do at home, and all other questions, especially which have come currently, like May, June 23, 22, and then this question also, that is for the May, June 23, 21. That is from the petty cash book. Maybe I have done this question with you. Then this question will also May, June 22, 22. We will do that also. Then May, June, we have done that. May, June 21, 21, 22, 22, and 21, 21. So these are the questions which you are supposed to do regarding the cash book and petty cash book. And this question also, May, June 21, 24, as I discussed with you, these are quite easy. In February, March 22, 22, I think we have done this. No, we have not done this. We have to do that also. February, March 22, 22. February, March 22, 22. But that is for the sake of. Then October, November 22, 23. That is also from petty cash book, and the previous one also is from petty cash book. October, November 22, 23. Yes. So that is also an easy question. And this May, June 21, 22. You can do that also. May, June 21, 22. And that's it. Next, we'll do in the on Monday class the last topic of petty cash book and main cash book. If you have any question, you can ask me. Otherwise, thank you very much. Take care. Do subscribe my channel and follow me on Instagram and